Good afternoon, everybody, and welcome to Tekmar's first Capital Markets Day. Delighted you've all joined us, and we do really appreciate you taking the time to join us today. Today, we'll review Tekmar's capabilities. We'll review some market trends, a bit of an update from the recent updates we've given you. The most important area here is to review the update on the strategic plan. And we'll have with the strategic plan, we'll go through a commercial outlook. The overall review today is to demonstrate our wide portfolio offering, and importantly, not just a CPS provider, and really kind of give the breadth of the business and the group, and particularly with the recent investments and acquisitions that we've undertaken within the business. And importantly, we'll leave some time at the end for Q&A. So before kicking off, what I would like to cover here is just a bit of a reflection on the market and a reminder of the big opportunity we've got in this market and why offshore wind and why Tekmar. The world is very much moving towards cleaner, greener sources of energy, and with a view to targeting net zero carbon by 2050. So quite a build-up in terms of political momentum, and in terms of investment in offshore wind is a key part of that message. We'll see later the acceleration in the offshore and wind investment, where we're seeing an increase from the current installed capacity of circa 33 gigawatts to about 238 gigawatts by 2030. In the last 30 years, the 33 gigawatts has delivered, roughly speaking, about 7,500 wind turbines. If we look at the next planned installation, about 16,500 wind turbines. So in round numbers, if you look at the data there, we're effectively doubling the capacity in a third of the time, which really kind of reflects the acceleration we're now beginning to see. So as we've seen the wind market developing, I think there's been a few false dawns in terms of timing. We're definitely starting to see a bit of momentum now swing towards actual installation, FID commitment, etc. So we're beginning to gain quite a bit of confidence in terms of the forward projection, and I will talk later about some of the projects we've got visibility on, circa 350 projects in the pipeline. So overall, we see the offshore wind now is a mature market. It's a sustainable source of energy. It's a standalone economic business case. And as we go forward in terms of the evolution over the next decade to more complex environments, to floating wind, we believe the complexity of engineering technology solutions is going to be required more and more. And we think the technology that we've developed within the Tekmar Group and the way we've built the Tekmar Group lends itself well to delivery and development of this technology as it moves forward over the next 5 to 10 years in line with our strategic plan. So this growth clearly forms a solid foundation and underpins the growth strategy that we're going to map out today. So if I could introduce you now to the team. Myself, I'm the CEO. I joined Tekmar going back to 2013. I recently took up the role of CEO in October 20. And prior to that, I was CEO and CEO of a FTSE 250 company, Wellstream International, which was sold to General Electric back in 2011. And I've got about 30 years plus, I've stopped counting after 30 years, of operating in the energy offshore markets. Delighted to introduce Derek Bulmer to you, for those who haven't met him before. Derek has recently joined us as CFO, and I'll let Derek make some introductions for himself.
Thank you, Ali, and it's a pleasure to join the team. As some of you will know, I joined on the 1st of June, so I'm relatively recent to Tekmar. Prior to that, I was CFO and in-house counsel at Tekmar Group PLC for 10 years, and then I had 20 years in various industry roles in finance, including Grant Thornton, KPMG, undertaken management roles, senior finance roles, and M&A. So later on today, hopefully I can give you some insights into the financial plans of the business, and I look forward to speaking to you later. Thank you.
Thank you, Derek. And before we get into the presentation itself, we thought we would take a bit of time to share with you a very short video, just showing some of the technologies and just try and bring the technologies to life a bit rather than doing it in a presentation format. So hopefully that helps to bring some of the technologies to life, and we'll be referred to some of these technologies as we go through the presentation in the various sections. So overall, if we can maybe just summarise our ambition in terms of our strategic plan. You've seen the headlines previously from our recent market update that we're looking to double revenue, organic revenue within the 5 years from the current run rate of 40 million. And delivering mid to high teens EBITDA. This is mainly delivered through organic growth with some small targeted technology M&A bolt-ons over the timeline of our acquisitions. We haven't included any significant M&A which would be outside the strategic plan and would be funded separately. And this is largely delivered through cash generation within the business. Building on our strong brand in the offshore wind market, our strategic plan going forward is very much geared towards capitalising our strong position offshore wind and retaining, circa 65% revenue streams being generated from the offshore wind market, and the balance coming from other energy sources like civils, a bit of oil and gas, a bit of consultancy, etc. We're looking to expand our technical capability, services, and importantly, geographical reach in line with the overall internationalization of the global offshore wind market. And, particular note is now the strong emergence of the US market. And in addition to that, we'll invest in our people, and Derek will give us a run through in some of the strategic initiatives around business improvement, ESG, sustainability, as well as our people investment plan. So if I could share with you now in terms of the leadership team, I'm very proud of the team that we have in the business, building on the strength and the strong team that Tekmar has had historically. It's led by a strong board, led by Julian Brown as chairman of the board. And Julian brings with him a wealth of strong sector knowledge within the offshore wind market. Chris Gill, a very strong background in listed businesses, good strong financial background, and a good operational background to balance the financial and PLC background. Ian Ritchie, we're delighted to introduce to the board earlier this year as a recent addition. Ian brings a wealth of experience from an engineering background. He was chief engineer of Rolls-Royce PLC and has over 30 years experience in the engineering space. And what you'll hear is a constant theme through the presentation is it's very much about enhancing our engineering capabilities, enhancing our technologies. We want to be known as an engineering solutions provider, an expert in the field, problem solvers, complex solutions. So Ian kind of supports us in that regard. The executive team, we're a very strong executive team with a good mix of strategic knowledge, market knowledge, engineering, and operational experience. So we've added some strength to the team recently, and I'm pleased to see that we've got a very strong executive team in place now. So if we move on to what we do. So very much, as I touched on previously, our focus is to address complex engineering solutions. We offer technologies and problem solving effectively in the water column for the energy market, predominantly for the offshore wind market. We have a very good brand reputation within the marketplace which we can build on, and we're looking to expand our technologies and engineering services, and I'll talk a bit more about our development into the OPEX market, the operations and maintenance market, which you may have picked up on the recent announcement, as well as the strength we've got within the CapEx market, i.e. projects execution market. It's built on over 35 years experience in the space, and in recent years we've complemented the historical strength that Tekmar had, particularly in the offshore CPS market, with some complementary acquisitions which have diversified our product technology offering, and we've seen some successful implementation. And actually, interestingly, in line with a strategy to penetrate the offshore wind market, one of our acquisitions, Subsea Innovation, traditionally an oil and gas play business. I was pleased to see the last year over in excess of 60% of the revenue within Subsea Innovation was in the offshore wind space. So they're kind of showing the demonstration, the strategy being in play. The group to date has already delivered a circa 40 million sales. So the kind of growth we've got here is kind of demonstrating that we've got that kind of level of run rate, that level of capacity within the business, and doubling that run rate over the next 5 years is very much an achievable plan in our mind with the investment we're looking to put into the business. If you look at the kind of history we've got about over 35 gigawatts, which is equivalent to the current installed capacity of various technologies protecting subsea assets in the offshore wind environment. Historical market share in the range of between 50 and 70%. And we've got over 8,500 core Tekmar CPS systems deployed subsea. Evolution since IPO has been more a diverse engineering solutions provider, with the PipeShield acquisition providing subsea asset protection to concrete mattress solutions, Subsea Innovation providing more technology on the equipment side, and Ryder Geotechnical more of the geotechnical consulting front end, which is complementary to the original Agile Tech business, where we undertake the analysis for offshore projects. So we're involved in the full project life cycle, from the early stage engagement in analysis, project concepts, early stage involvement, all the way through the CapEx project, all the way to more so in the OPEX project. So we're more involved in the full life cycle now, and we're looking to invest particularly more in the back end of that project life cycle. And as we move through the decade, you'll see us talk more about the floating wind technologies, which you see on the right-hand side. And we're already starting to work on some of the early stage projects to develop the technologies. Some R&D initiatives are working jointly with some of the developers to be ready for the floating wind market, which will come in really in a commercial scale from mid-decade towards end of this decade. So in terms of our global reach, the scale of the business globally, we're circa 175 employees. We're located in 17 locations globally in 12 countries. Importantly, our core presence is in the UK, where we built up the business from the northeast of England, which is fast developing as a centre of excellence for offshore wind for the UK and the European sector. As the offshore wind market internationalises, we see the internationalisation of that knowledge globally. So I think we're in a strong position with our UK and European presence, and particularly the confidence in terms of the number of projects that we're seeing within the UK and European sector over the next 5 or so years. We also have a presence in China. We have a team based in Shanghai, and that's proven a successful investment, and we're looking to replicate that penetration within that market in other areas as the internationalisation of offshore wind develops. And we have various other facilities and representation around the globe in key offshore wind markets. We have a strength within the UK market. We have various locations within the UK, and we have various partners representation of the world, and we are continuing to invest in the partnerships. And we've just agreed a partnership in the US, which allows us to offer local content to the developers, and it also moves us towards some technologies that are complementary to the existing technologies, which brings solutions for the floating wind market. So we're very excited to be present in the US market, and we'll grow and develop that area as the investments continue to progress in the US. In terms of a value proposition, what is our value proposition? I think this is an area that we need to expand on more. I think the full life cycle value proposition that we've got within the business needs communicated in a wider sphere globally. You know, we're starting to talk to customers now in terms of the wider offering, and particularly our presence in the O&M market. It's an area that we've developed over the last couple of years, and we now need to kind of start marketing and communicating in a wider base in terms of that overall project life cycle. If we look at it in simple terms, we optimize and de-risk offshore wind projects and offer asset protection and extension of existing facilities like cable protection and product development over the life cycle, which can amount to about 25 years design life. It ranges from early stage engagement through project life cycle now into the important offshore OPEX market, which we see now is accelerating as a result of the maturity of the offshore wind market and a critical mass of installed assets, which now need some form of intervention, some form of service and inspection requirements. And we're seeing inquiries coming in more and more. And I'll talk a bit about a successful project we've been running for the last couple of years in the O&M market. We benefit from a shared customer base between the product offerings and between the various businesses. And what we're seeing more and more is a one-stop shop selling opportunity, which simplifies the procurement cycle for our customers. So I think the strategy we've developed with the various acquisitions and the complementary technologies is supporting differentiating our value offering into the market. So overall, we believe we've got a very strong platform to grow and deliver on a strategic plan. And the wider offering, we think, is quite unique in the market. We don't see other players who have the full complement of technologies, know-how and offering that we are offering into the market. So in terms of a bit more colour on some of the technologies, these are some recent project examples that we've undertaken. And if you just take a quick glance at some of these technologies, you know, it's really a common theme across the business is the engineering knowledge, engineering know-how, complexity, engineering analysis, etc., is a key component within all the businesses, and innovation and technology development. Some of the examples there on the top left-hand side there, you see the emergency pipeline repair system. This system effectively where we have a breach in a pipeline, whether it be an oil, gas, water pipeline, subsea, we can install a hydraulic clamp which effectively reseals the pipeline. And I'm pleased to say that one of the awards we announced this morning was for the design, engineering and delivery of one of these EPRS systems. In the middle shot there, you see a PLET pipeline end termination installation tower. Now, this was undertaken by our subsea innovation business, which was a full design, engineering and delivery project, which equated to about 2,500 tonnes of product, very complex hydraulic software system. And this was the deployment of rigid pipe in water depths down to 3,000 metres. So really a demonstration of the kind of engineering know-how that we have within the business. Ranges on the bottom right to concrete asset protection, which is a strong addition to our portfolio through the acquisition of Pipe Shield. And bottom middle, you see a development within the O&M market. This is a CPS cleaning tool. And what we're seeing more now is a learning within the industry is that we see a significant marine growth in some of the assets, and these assets require cleaning up of the marine growth. And this is a technology that was developed by our subsea innovation business. And it's a retrospective deployment with a cleaning tool, which will run up and down the CPS system to reduce marine growth, thereby reduce loadings and extends the life of the product. So overall, some strong innovation and capability and technology know-how within the business is the key theme. So in terms of our engineering capabilities, we think we're uniquely positioned in terms of the full project lifecycle offering. We don't see any other competitors offering the wide range of services we have. Our competitors, in some cases, outsource a lot of the critical elements that we have in-house. So the breadth is very important, I think, to our customers, and we're seeing more and more shared customer engagements as a result of this wider offering. And this is an area that will continue to develop a bolt-on niche technologies as we see the market developing. So we think we're in a very strong position to support investment in support of our customers. So in terms of the customer base, we have very strong relationships built on over 20 odd years engagement in a critical way with the development of the offshore wind sector. We see early engagement as being key. We do have some frame agreements in place which helps with this early engagement, product development, product evolution. I'm pleased to see that we are now working with some customers on R&D initiatives as this market is evolving into more complex environments and particularly into the floating environment. So that's an exciting phase for us, and we'll continue to invest in our technology and our know-how, and particularly our engineering skill base to meet these demands. So overall, I think we're in a strong position with our customers and well recognized with our customers, whether it be the developers as energy companies, the tier one contractors or the installation contractors, and importantly, the manufacturers of the cables and the technologies that we protect. To summarize our technology offering, we're very proud of Tekmar's offering today. We've got a very strong capability within the business. We've got a very strong brand reputation within the market. We're very much positioned where we want to be. We're in a very exciting growth market, and I'll talk about the scale of the market growth in a couple of slides. But overall, I think we've positioned the business well. We've added some complementary technologies which fit very well in terms of the overall value proposition. And, we see sustainable growth through a position of strength. And we want to protect our industry-leading position that's been built on our very strong record and historical reputation within the CPS product range within the offshore wind market. And overall, we see this market now evolving more into a stronger global footprint. So if we move into the markets overview now, it's clear that we're seeing a transition now taking place and a very strong market opportunity that suits the Tekmar Group. We see some momentum as we kicked off with the first slide, some strong political support now in play, really driven by the overall carbon reduction drive coming up from G7, from all the political agendas, moving towards kind of local content initiatives, etc. So we see strong momentum building towards a more sustainable environment, for which offshore wind is going to be a key part of that. Global capacity is increasing by 210 gigawatts over the next 10 years. And as we said previously, that's effectively a 2 times increase in a third of the time. And we're pretty excited about that. If you look at the growth core UK market where we're very strong, quadrupling it from 10 to 40 gigawatts by 2030. The US has now committed to 30 gigawatts, which has re-entered the Paris Agreement and is pretty much in line with the current installed capacity globally. So that's an exciting space that we have to play in. And we see the EU committing to 60 gigawatts in a similar time frame. If you're just going to look at the UK and EU alone, which I would say are the strong markets for Tekmar historically, roughly speaking, 100 gigawatts, circa 50% of that installed capacity is going to be delivered within the UK and the European market. So effectively our home territory. So I think that bodes well for the investment we're mapping out here today and the strategic plan we're mapping out here today. So if we look at the global wind outlook into 2030, we're now beginning to see sustainability, strong visibility. In excess of 350 projects now are visible to us by 2030. So we're almost tracking now, particularly on the larger projects, a year-by-year transition in line with their strategic plan. The existing capacity being dominated by European know-how, which I've probably said before, that we see that technology very much being transferred globally and internationally, and we think we're in a good position to support that development. We now see 38 gigawatts of installed capacity either under construction or in FID, and the strong markets being Asia, where we have a presence, and the European and the UK markets. So effectively, markets we know very well and home territories, I would say, for us. We see 172 gigawatts in construction by 2030, and the main areas dominating the 172 gigawatts are Europe, Asia, US, and then kind of other geographies starting to come in more and more into play. So in summary there, in terms of market, we see we have a strong presence in the core growth markets, UK, Europe, Asia, and is supported by our early investment into the US market through our partnership with our local partner. And we'll continue to invest in these kind of local partners in the first instance until we see some more traction. Then we'll start to develop some more and more local content as the investments grow and continue within the various markets. And offshore wind market, if we could just have a look at, I've alluded to before in terms of a bit more confidence coming now into project execution. We have seen a slowdown in activity between 2019 and 2020. And we see it recovering from 22 onwards. New projects and tender activity increased by about 93% between 2019 and 2020, and that kind of largely played into the kind of transition phase we're going into the market. Pleasing to see that in 2020 there's about 9 gigawatts of FID in process, which is an all-time high, which kind of shows this transition in the latter years and that kind of steady trend going out to 2030 and beyond. That's reflected in our own tender activity, where we're seeing a record high number of inquiries coming into the business in 2021. The transition we're seeing just now, we're still seeing a bit of an increased timeline to conversion of these inquiries, a bit COVID related, I guess, a bit of inefficiency in the marketplace, but I think we're starting to see a cycle coming out of that now, which bodes well for the future investment and the growth that we're seeing going forward. So overall, it supports confidence in the forward projection and trends and very much kind of underpins our strategic plan. Now, a fast-growing market for us is the O&M market, the OPEX side, where traditionally we've been a CapEx play, which is deliver products, project execution, and then we walk away. What we're now seeing is more and more demand for, the after-sales service offering. And we've been actually operating in a project, and I'll show a slide shortly in terms of that project. But this we see as a major growth opportunity, a complementary area for us that our technologies lend themselves well, whether it be retrospective refit of some of the technologies. So overall, the scale of this market is circa $9 billion by 2030. The UK market alone is about 1.3 billion sterling per annum by 2030. So, even a percentage of the market lends itself well to this should be a key part of our strategy going forward. We see this as a maturing market opportunity as a result of the installed asset base, and some of the technologies will need enhancement from the original assumptions, and we're seeing that in play in the market today with some key learnings from the industry regarding the complexity and engineering solutions required for the, I would say the more aggressive environment that we're in. And we're active on one project, and this project we've been operating on since 2020, continued through the course of this year, and we're hoping that this project will carry on into next year. And just the scale of that project, it alone represents about 10% of our annual group turnover. So, demonstrates why we need to be in play in this space. And as I said, the technology, I think, lends itself well, and the enhancement that we're putting in. And we will build a team around this O&M market opportunity, and we'll be bringing more leadership into the business to further penetrate this market. So if you look at offshore infrastructure as an area that we operate in, the traditional market that some of our businesses have been very strong in, we see an opportunity here as some of these businesses work towards the green energy transition. So more and more of these businesses are coming out, for example, from the oil and gas market, more into the offshore wind market. We've got existing relationship with these customers, so we think we're well positioned to support them, not only as traditional market, but the new markets they're emerging into. If you look at the oil and gas investment, we're seeing the likes of BP, Shell, Equinor, Eni, Tier 1 contractors, all investing now in offshore wind. And if you some data we've just hot off the press in terms of ScotWind investment in the Scottish environment, we're seeing some fairly racy bidding going on there, particularly from what we class as oil majors working this transition plan. So we think we're in a good position to support them with the knowledge we've got with these developers. And if you look at the data points in the traditional market, this is broken into 5-year increments. And if you compare the projects planned between 2021 to 25 compared to the last term, 2016 to 2020, it's representing by that V shape. And if you look at the graphs on the right-hand side, in shallow water, which is water below 125 meters, and deep water is 125 meters to 1,500 meters, these are the markets that the Tekmar technology has traditionally sold into. And we see a very aggressive recovery in the shallow water, not surprisingly, the cheaper CapEx projects, a healthy recovery in the deep water projects at the 125 to 1,500 meters, and a much slower recovery in the larger deep water projects, so the projects which you see in the likes of the Gulf of Mexico, offshore Norway, west of Shetland, etc. So we're quite excited that there's a complementary recovery in traditional markets here that will contribute to our strategic plan going forward. Whilst primarily we are focused on offshore wind, we will also sell into other areas where the technologies are complementary and where there is profitability to be made. So overall, I would say that we're seeing strong market fundamentals supporting our existing offering and our strategic plan. And we see geographies continuing to emerge. We see that UK, EU know-how will be internationalized. And that knowledge base, I think, is going to be used on a global basis. This growth plays a big part in Tekmar's strength. We see more complex technologies coming into play, hence the kind of key theme regarding more investment engineering, more investment of people, more investment technologies. We definitely see that as a big opportunity. We're very confident in terms of our overall technology capability and the ability to expand and scale up in line with that growth. And we also see a very stable competitive environment. We've seen fluctuations in that market. We talked about it last October, where we saw one significant competitor coming into play. That has changed again, where that large player has sold off the particular area with an offshore wind or a private business. So we think that is restabilizing the competitive landscape. So moving into our strategic plan, and what does this mean in terms of implementation of the market strategy? Clearly, the headline is around organic revenue growth, doubling of the revenue, as I talked about before, mid to high EBITDA delivery towards the back end of the 5-year term, and working through that kind of initial transition we've got within the market at the moment. So if we look at the overall strategic plan aligned to the market, there are 2 key catalysts, which is technology build, technology investment. That's where the opportunity is, being known as a engineering solutions provider. Where you have a problem, give us your problem, we'll fix the problem. That's a key theme tied in with the market growth. That clearly is the bedrock of our strategic plan going forward. We have the advantage that we're building on strong foundations. We have a very strong position in the marketplace, and that allows us to leverage our market advantage. In addition to the engineering technologies, we will invest in services. We will invest on the operation side, and you'll see us evolving more and more across the project life cycle, and investing further in some of the kind of lighter areas like O&M that we've kind of started to offer and sell technologies into. So if we look at our growth journey, it's really kind of delivering on that market opportunity, and we clearly have three growth pillars. We've had the historical delivery and execution in the business, which has been a successful growth story. We've got the current position where we're working through this transition phase, and we've got the future where we're talking about the accelerated growth. And if you look at the history of the business, pioneering technology, early stage engagement, first mover advantage in a growing market. And the team did an excellent job in kind of developing the R&D, developing initiatives to penetrate a very strong position in the market, which we're now going to build. In post the IPO in 2018, that allowed us to further invest and diversify the technologies, and I would say very successfully. So we've shown a successful track record of both acquiring and integrating successfully some core technology offerings that we can sell into the market. Current phase we're working through, there's a bit of a transition in the markets now, so we're classing that as a transition phase within the business. That we've taken the opportunity to refresh our strategic plan, which is obviously what you're seeing today, and really very much aligned to timing. And we're also working on the core operational execution efficiency, investment in business improvements, systems, processes to allow us to be in a stable foundation for this growth platform. And overall, going forward, is this accelerated growth really much aligned to market recovery, new geographies, floating wind coming in more and more, which is part of the evolution in technology development, and us being part of this new technology transition are the key enablers for this growth journey. So if we look at the growth strategy overall, we have three growth pillars: organic growth, sustainable business model, and acquisition strategy. So I'll cover the organic growth in a bit more detail, covering strengthening the business, enhancing our market position, enhancing our technical capability. And this is all through self-funding cash flow from the business, which in round numbers is an investment of between 10 to 12 million, roughly split 50-50 in kind of core investment, traditional investment in the business, and 50% in kind of new initiatives, new technologies within the business. And Derek will cover the sustainability of the business, acquisition strategy, focusing on the people strategy, ESG, business improvement initiatives, and a M&A activity. So if we look at the key investment themes within the business, what is the plan? So we've talked about the kind of scale in the investment. We've talked about the timeline of the investment. So in round numbers, it's about a 2 million investment on an annual basis. The key investment areas really around offshore wind technologies, investment in products, investing in the markets we operate in, offshore wind operations and maintenance, which is that OpEx market I've talked about, investment in floating offshore wind technology so that we're in a strong position. So as commercialization for floating wind comes in mid-decade onwards, we're in play there. And we're investing in a grouting division. I'm so pleased to say that we've secured some awards already through our pipe shield business. So we're successfully exiting some of these projects, and we've invested in some of these technologies already. And importantly, following the market trend into the new geographies as the market evolves internationally. So if you look at the scale of the markets and kind of just looking at the addressable market position, so if we've taken a bit of a view here in terms of what level of inquiries would we expect to see on an annual basis from each of these investments, and you can see there that the offshore wind product development for fixed facilities, so we exclude floating technology, which is kind of coming in mid-decade, as I've talked about. the addressable market on an annual basis is between 60 and 70 million sterling. Grouting division, we see a market opportunity of between 40 and 50 million per annum. We see the O&M market very conservatively being in the 20 to 30 million range, depending on how much investment we put in and where we position ourselves to address that market. At the moment, we've positioned ourselves purely on replacement product engineering solutions and providing new technologies to replace existing products. But there are a raft of other areas we can develop in that area. And new geographies, we're looking at 40 to 50 million addressable market, and the floating wind market in the order of 70 to 80 million addressable market. So overall, some big wins to go after for each of the key investment themes we see in the market. And in terms of diversification and the markets we operate in, I just want to present here a bit of an overview of where we operate. So very strong in the CapEx markets, which is what you'd expect from the traditions of the business. Very strong at the front end through the Agile Tech business, the rider business, subsea innovation, pipe shield early engagement, as well as the Tekmar Energy business. Strong in engineering, and we'll continue to invest and develop our engineering capability. Strong manufacturing base. The installation side is one that we don't play in, and there's a very simple reason for that, is that our customers operate in that area, so we complement our customers' offering as opposed to compete with them. So it's a very simple logic there, is that we partner and align with the installation contractors and complement their offering. O&M and life extension, we've kind of put in the amber category because it's kind of early stage for us. We've had some success in these areas, but we're going to invest more and more, as we've talked about previously. And decommissioning is very early stage, so we don't play in the decommissioning market. I think that's a bit way off yet. In round numbers, we see that about 60 offshore wind turbines have been decommissioned to date. So it's a very, very small part of the market. So it's an area we're not planning to penetrate in the near to mid-term. And as part of a case study in the O&M market, this is an important area for Tekmar. And why is it important? Because we see this as a mature base. There's an example of an engineering challenge one of our customers had, where some CPS required replacement, and I hasten to add, it wasn't our system, it was a competitor system. So we came across this through our Agile Tech business, who were asked to do some engineering analysis to assess the life cycle of the project, and we engaged Subsea Innovation and Tekmar Energy alongside Agile Tech, so showing the complementary nature of the engineering solutions. So we provided the analysis, we provided a risk review and the extension of the operation and the technologies. We designed a retrospective installation of a dynamic bend stiffer, and that's the black section you see in the middle of the tool. And we designed this tool to support the installation, and we are actually, as we speak, in operation at the moment, installing these systems offshore. So a good example of why the market is so important for us and why we're excited about this market. And we're hoping that this particular project can continue into next year for us. And with that, I think I will hand over to Derek, who will give us a run through some of the other areas.
So I thought I would indulge in just to reflect a little bit on why I joined Tekmar, and really when I was approached and I looked at the technology and the market opportunity, as has been talked about today, it fascinated me. And I did my homework and I looked at the history of the business, and since IPO, the acquisitions that it undertook, to me, it appeared very much a group that was intent on growth, excellence, and success. Also, it was at the forefront of the technology it developed, and it's in green energy, and I think that's a space that excites a lot of people. I think it makes it important to come to work when you're part of that type of thing. So those things in terms of market opportunity, technology, all appeal to me. And of course, I met Ali and some of the team, and I thought, well, this would be a great team to work with. So where am I now? The northeast is becoming a hub of this technology, and this business is central within that. So I'm 8 weeks in, and My experience has been that everything that I was anticipating is there. There's a high quality team here of highly intelligent, highly capable people, core to what we're going to do. Positive culture, creative culture, problem solving culture, all very, very important. So as I go through the following slides, hopefully it'll give you some insights as to why I believe this is the top quality business and that I'm proud to be part of. So if I start on the ESG strategy, in fact, we had a board meeting this morning, and central to that was discussing our plans for ESG. How do we roll it out at micro level, and how do we ultimately be able to identify targets within that, measure it, and disclose it? But before that, we had to sort of develop how do we see the ESG strategy, and what are we going to base it on? And as part of that, as a business, generally speaking, you'll probably all know that when Tekmar IPO'd, it got the green economy mark, and that demonstrates its credentials as a business because it has over half of its revenues generated from renewable energies and the likes of that. Further to that, obviously, as a PLC, governance is core to what it does. So when we looked at ESG, we looked at the UN's Sustainable Development Goals, and we had a review of those, and we concluded on the 7 boxes to the left that you see in terms of good health and well-being, quality education, and the other themes within there. We think they will be core to the business in terms of building its relationship with its team, its strategic partners, and meeting the requirements of many of our customers and supply chain who are seeking recognition of a positive ESG strategy. We see ESG as being not just an exercise in terms of building a culture within a business, but I think it's also a good economic value enhancer. It's critical to our customer relationships we talked about. We believe it will drive efficiencies through the business, through cost savings, and sustainable partnerships, which is going to be really, really important. So part of this morning was when we've obviously taken this further step forward in terms of the roadmap with the board, was to start to roll out details of that, and then we'll be out to the exec team, sort of like refining that process. So that's really where we are on ESG. And if I move on to the next slide, of course, we've talked today about our plan, and we talk about our market opportunity, and we talk about ESG, but all of that, central to all of that, is our people strategy, because without people, plans and culture don't change. So we're very much into investing in our people. And if you look at the pie chart that we set out on this slide, it's obviously circular and it goes round because it's eternal. We're constantly working on this, and we have a 3-year plan where we look at equality and diversity and inclusion, the culture and values and behaviours of the organisation. We're also into capabilities and talents, and how do we skill up our people? How do we recruit? How do we continue to develop our individuals? And an important part of that is engagement and communication. So all of these are critical. And of course, we have we look at a reward and recognition within the business, whether that's bonus plans, whether that's sort of equality in pay. And of course, we also are very, very mindful of health and well-being of our team as they go through the processes and the challenges of growth and change. So we have a number of policies there that we've adopted to ensure we can monitor on an ongoing basis the health of our team, really. Talk now about M&A. I mean, we talked earlier about the capabilities of the business, and one thing when I talked in my introduction, what struck me about Tekmar was the growth that it went through in terms of being innovative, solving some big challenges in the industry when the industry was still new, and learning a lot about what the challenges would be. But it IPO'd in 2018, and in no time whatsoever, it went across and undertook 3 acquisitions, 3 critical acquisitions, 3 acquisitions where the business saw where it felt the market was going, and it bought in Subsea Innovation. I think within 3-4 months of floating before the year end, just at the year end, it bought in Ryder Geotechnical, and then in October 2019, it bought in Pipe Shield. All of these businesses are critical to the future of the business and the needs of the industry, and all undertaken in short order. And then, of course, shortly after the final acquisition, the whole world faced the challenges of COVID. So despite the fact that of COVID being there, the business has managed to integrate these different technologies and products. And we see, as we look down, some major awards in Pipe Shield and Subsea Innovation, post-acquisition, sort of showing the success and the foresight of the business in the acquisitions. And then we've got Ryder as well, that provides visibility of offshore projects. But when we talk about M&A within Tekmar, we're forward thinking. We try and anticipate what the industry needs, and some of that has been laid out what Ali has talked about earlier, and some of the strategy and where we see the market going. We're looking to create a platform for growth through diversification and de-risking to some extent the business as well in that process. We look for common customer base that will expand the revenue streams across all of the projects, and we're looking for applied engineering and technology solutions to address sort of like some of the more complex industry problems. So that's the rationale that was applied in the businesses that we acquired, and that will be the rationale that will be applied in any businesses that we currently are exploring as part of the expansion of the group. It's important to recognise that when we talk about the doubling of the business over the next 5 years, that is organic growth. So none of the plans that I talk about on the next pages include any impact of acquisitions, but of course the business will keep its eyes open on opportunities, typically niche technology bolt-ons where there'll be added value, low value transactions where, as we have done in the past, it will be hopefully a combination of deferred consideration and shares. But as I say, the business will take a prudent approach in that respect, and as I say, relatively minor M&A targets possibilities. In terms of commercial outlook, one of the things that you saw in the earlier slides was just the scale of expansion over the next 10 years that is backed by political will and capital. We see 210 additional gigawatts, and almost half of that in Europe and the UK, almost on our doorstep. In fact, the UK practically over the next 10 years expanding the gigawatt capacity by what has been undertaken in the last 30 years. So we see this huge opportunity within the business, and the business has already, through acquisitions and technology development, lined itself up to take advantage of that opportunity coming our way. So, and we can see that in the inquiry book. If we look at the inquiry book alone, that has increased to 320 million. That's up 17.5% since we announced our H2 results. Order book is stable at 13 million, and we have 10 million contracts and projects in advanced negotiation. So it gives us a lot of confidence that what we see in terms of the market opportunity and market pull is starting to manifest itself in our inquiry book, and we believe that will drive the growth of the business organically over the next 5 years. What does this opportunity mean? If we're talking about 210 gigawatts and the growth in Europe and the UK, what does that actually mean in terms of revenue? We've talked about the different streams of the business in terms of the existing technology within the business, the acquired business, and the technology development. But what we do, we've taken a position from the financial year 20, where we had about 40 million of revenue. You'll see that obviously in the 31st of March 21, revenue was clearly impacted by COVID, as many businesses were. Fortunately, the business has held itself together during that process and created a good platform with the team that it has and the technology that it has, that we expect to see through growth in revenue across these streams, that we'll be maintaining our market position and building on it with market pull and O&M activity. We expect to see commercial traction across the global customer base for subsea innovation, pipe shield and rider, the businesses that we acquired in 2018, 2019. And of course, we'll talk about the investment in the business. But as part of that investment, we'll continue to develop the technology platform of the business. And we think that industry know-how and the fact that we can deal with more complex engineering solutions will give us a market advantage there. We're an experienced business in this. We've done this for many years. We understand the subsea challenges, we understand the technology, and it's that experience that we're going to build on to take the business forward. And the other area, of course, is regional expansion. The big part of the political support is to grow offshore wind globally. So we're going to have to follow that market, and there will be regional expansion. Now, we'll typically do that on a baby step sort of basis. We go through partnerships, joint ventures, or anything that allows us to build into a local market, depending on structure there. And we have, of course, again, experience and history there in what we have done in China. So we're very confident with what we have as a platform, what we have in terms of an experience base within the business, that we can take the business from that number of 40 million to 80 million through our organic growth based around the market opportunity that we have. And again, I reiterate that excludes any impact that we may have from M&A activity. So if I move on to the next slide in terms of what does it mean for profitability and what does it mean for sort of cash generation, and we've talked about the growth in revenue, the market opportunity. And a big part of what we have at Tekmar is we have a lot of operational gearing. And we believe that the operational gearing, if we take where we are, the last set of results, 31st of March 21, that effectively shows our break-even position of the group of being 30 million. And so how do we build from that 30 million as the revenue comes in? Well, we've retained our margin at a strong level at around about the 30%. We expect to see some growth in that margin over the ensuing years as we invest in our processes, into our technology, and developing the business. Although we do build in a 7% increase in our cost base of the business, but there's a lot of leverage within the business and capacity within the business to grow without proportionately increasing the cost base. So that will give us leverage and economic leverage through EBITDA as we grow the business. And we expect, as the business gets towards that 80 million revenue, to take the EBITDA percentage into the mid-teens. And that will then, our anticipation is that will generate cash between 15 and 20 million on top of the investment that I'm going to talk about on the next slide of 10 to 12 million. So we expect to be cash generative by the end of this process. We expect to have a strong EBITDA position, and we're confident of our growth based upon the capacity, experience within the business, and also the market pull from the expansion of gigawatts. So we talked about what will drive our growth, and part of that is technology and expansion within the business. And what we declared to the city and to the market when we did the H2 results was we believe that we'll require investment around about 10 million, possibly 12 million over that 5-year time period. So we expect it to be reasonably evenly spread through that time period, and actually half of that would be our typical run rate expenditure. So our incremental element of investment would be 6 million in that time frame, and again we expect that to be reasonably evenly spread. Now, I used the word experience in the previous slides, and I think it's really important to remember here that this business has undertaken these sort of expansions before. It has undertaken technology developments before in line with what the market needs. So we very much work on market pull in terms of the technology development. But the main part of the investment really driven by our expansion in O&M. That's the largest sort of like single investment under this program. Primarily capex and technology, and it'll be phased equally as we expand into the market. The next sort of major element will be, really through our pipe shield business into grouting, and there'll be some capital equipment there. And then there's a series of relatively modest investments across a number of key initiatives, including product development, into existing offshore wind capability, and looking into floating wind as well. So that's really where we are in terms of the investment, and I would reiterate, we're about half of that is incremental and evenly spread over the time frame. If we talk about the cash generation and the EBITDA generation, and we talk about the investments that we undertake, what does that mean in terms of the balance sheet strength and the liquidity of the business? And if we look at the expectations of a cash generation in that region of 15 to 20 million after the investment program of 10 to 12 million, we have to consider the liquidity that challenges that might face the business. And so what I've done since I joined Tekmar, I've increased the banking facilities for working capital support from 3 million to 6 million. And I would point out that's what we requested, because that's what we saw as a challenge number if we needed it, and we ran some scenarios, and 3 million was a number that we felt would give us a lot more comfort in terms of managing different scenarios and different growth profiles. And the bank gave us what we asked for, and are keen to undertake further discussions as to what will face the business as it goes through this growth profile. So we're confident that our bank will be there for us. We also extended our bond facility that will enable us to negotiate with our customers in terms of earlier payments, and provide them some comfort and security in that respect. So we got the infrastructure and the capacity within the banking agreements. Further to that, what we'll also look at is the commercial disciplines and continued focus on cash. So we have a team that are experienced with working with complex long-term contracts. They're experienced with working with international customers and the different methods of processing payments. So what we're going to do is build on that. We'll seek to bring in a group credit controller so that we are geared up for the more complex environment for the growth. We're ongoing, and we're reviewing commercial systems within the business. I mean, that is a live process that is constantly dynamic, and we're comfortable of where that's going, and we've got a strong team behind that. But the other thing, and this is something that I used to do in my previous role, I had an innovation function reporting into me, and I think what we'll do as a business, we're going to explore looking for support from some partners, whether that's local, national, or global, in terms of helping us with CapEx, some of the CapEx programs and the technology development. So we'll be looking at funded programs and grants. We've already set up a team to start exploring that and building up a database as to what our technology is needing and matching that against any funding programs that are out there. So I think that will also further mitigate the net cash expenditure that we might see over the next 5 years. The other thing to add on, the final point, is obviously any cash planning that we've talked about here excludes any potential impact of M&A activity. But as I explained in an earlier slide, that we would expect that to be relatively modest exposure, and largely we would look to try and fund that through deferred consideration and paper. So really that's where I am, trying to put some numbers to what Ali has explained in terms of market opportunity, and I will pass the baton back to Ali to conclude the position. And thank you for listening to me.
So thanks very much, Derek. You've been very busy since you've joined us, obviously. So overall, if I could summarize now, so we're very pleased with the plan. There's a lot of work going into the plan. We implemented this strategic initiative when I came on board in October, as we discussed back in October time. It's clear there's a big market opportunity for us there that we can capitalize on. That's well suited to the development and the know-how we've got and the technology we've got within the business. So the kind of evolution is obvious. We will deliver this plan through investment in a leadership program. It won't happen on its own. So we've initiated a leadership program with the executive team and the various businesses to make sure that this penetrates within the businesses. It's very easy to come up with a strategic plan. Delivering it, etc., needs a bit of momentum, a lot of discipline. So we've initiated a program, so it's not going to go on a draw, and we'll roll it out in a year's time. So very much it's an action plan in progress, and it will be part of the culture going forward. We've got a very strong foundation to build on, and good, strong legacy, good brand reputation within the business, and particularly within the offshore wind market. We've got a strong global customer base, which really lends itself well to the initiatives that we've committed to. We are experiencing a significant market investment, and it's now happening. It's live, as we've demonstrated with the project execution. As we're coming through this kind of transition phase that we've had through 1920. And we think we've got a strong competitive advantage to capitalize on this investment plan. And it's very clear that this growth strategy is a big opportunity for us all to get behind and invest. And very pleased to see that I've got a lot of buy-in from the team, and it's very much a bottom-up approach in the development and the delivery of the strategy. So hopefully that gives you a kind of clear picture as to what we've been working on for the last few months, and a view in terms of what we're going to do going forward. So with that, I'd like to open it up to Q&A.
Do you reckon that SG&A will plateau, or is it likely to increase in the coming years as you try to add or grow other revenue streams?
Well, as Derek alluded to, we've got some operational gearing in the business. We see in the short term we'll plateau. We've mapped in some small increase on the SG&A side, so it's not a significant increase we'll see at least in the near term. And towards the outer years we'll put some more investment, so it's you'll see some increase towards the back end of this 5-year strategic plan.
Tremendous. And could you throw some light on the financial impact of the issue raised by Ørsted around the array cable issues?
Yeah, it's so clearly there's a bit of learning ongoing in terms of historical products that have been installed, and we touched on this when we did the H2 update in terms of scour protection and we're still going through some detailed root cause analysis with the various developers who are experiencing some of these problems, and the removal of that kind of second layer of rock and a more dynamic environment is generally one of the contributing factors we're seeing. So we're working through that in terms of lessons learned, and kind of we want to really learn some deep understanding of the technologies there to make sure that we're kind of engineering back in more robust products going forward, and really understanding what's actually required for the life of field for these projects. So it's very much, we still see it as an industry issue, and we're collaborating with a number of developers, installation contractors, etc., just to learn. And we think we'll jointly resolve it. So we don't see a significant impact to our numbers, because we think it's an industry learning and some of the evolution of the industry, not just technology-wise, but just the commercial side and cost-cutting.
Tremendous, thank you. And it seems that government are setting higher local content rules. Is this impacting the business? And will you have to increase the capital intensity, more facilities or capacity of the business so that overall projects meet local content rules?
Yeah, it's a fairly difficult one to answer there. So, we hear a lot about local content, even in the UK sector, where we're positioned here in the northeast of England. Over the years, we've seen a lot of political talk of local content, but not measured. A good example of that, if you look at, some of the significant offshore wind projects, they're largely being executed from an installation point of view, from a fabrication point of view, overseas. So, it's basically simple words that are being used. I think what we see going forward is there will be more measurement of local content in the UK. I think what we're seeing, if you look at the ScotWind developments, I think there's a preference towards local, so we'll have a look at some collaboration there in terms of benefiting. I didn't think as a Scotsman I would be saying that Scotland is an international arena for us, but it's heading in that direction. So we have to have a look at some strategic initiatives there, which are relatively easy to do in the UK and in Scotland to leverage our know-how. Part of our investment in the US is partly to play into that local content. So I think it's a preference. We don't see it as a key differentiation, other than it's nice in terms of local community investment, etc., etc. So it's not an area that we see much in play to date, but I think as things go forward and we see more sustainability, investment in communities come into play, and being a good citizen type of approach from developers and contractors, I think we'll see it coming in more and more into play, and that's why we're kind of positioning ourselves, for example, in the US to offer some element of that local content, so we have some kind of differentiation. So it's a kind of fairly light evaluation criteria at the moment, I would say.
Great, thank you. And how does floating wind power work?
So very simply, what you've got is a wind turbine above the waterline, and then you've got a static structure that sits on the seabed. And if you look at the left-hand side there, you see the kind of jacket structure. So traditionally, the market has moved. If you look at the first three concepts there, monopile, structure installation, which actually are fixed to the seabed, which makes it relatively simple from a subsea structure architecture point of view. If you look at the right-hand side, it becomes commercially unviable to install static structures in deeper water. So deeper waters we kind of class in the offshore wind space above 60 meters. So that's where the offshore wind technology comes in. So it's floating technology with the wind turbine, obviously just above the graph you see, or the picture you see here. So that requires a floating buoyancy technology for the structure itself. And these are moving, roughly doubling in size, and in some cases trebling in size the capacity generated from a single installation. So much larger structures and obviously floating in the water column. So these are then tethered to the seabed, anchored to the seabed. And then when you look at the cable coming up to the floating platform, that requires buoyancy technology to transfer the loads from the floating facility to the static cable section on the seabed. So a much more dynamic environment, but evolution taking place there in terms of, if we're going to make this 210 gigawatts, we have to go into deeper waters. The shallower basins will have been consumed by mid-decade, so therefore we're moving into that transition for floating wind.
And what do you see as the key risks to your plan?
Yeah, I would say, very encouraged now that we're seeing traction in the market. I think prior to the current timeline, there were always some kind of false dawns in terms of installation and timing. So I think two issues. One is in the short, well, probably both in the short term. I think it's, we've got a big inquiry book. We're starting to see this volume that's predicted in the market coming into the inquiry book, the 320 million up by 17% in round numbers. So we are seeing the inquiries coming in, but it's the timeline to convert the orders is what's proving difficult to predict at the moment. Some of the projects that we've been chasing that we were anticipating award in January, still not awarded. And, one particular project where the current update is that it's going to be August. So there's a bit of a lag in the market just now, a bit of an inefficiency in the market, partly COVID impact as a result of inefficiencies, people working remotely, etc., etc. So I think we're starting to see that improving. As the phrase I always use is, we're seeing some of the inquiries coming off the conveyor belt now. So that's encouraging to see. And partly it was in the announcement of the 10 million in the contracts under detailed negotiations now. So we've started to see a bit of traction there. So that's one risk in terms of uncertainty of timing of conversion in the near term. I think momentum will build because I think we'll head into a capacity issue where we can't have all the projects coming at one time. So I think that we'll see a bit of an acceleration as we go midterm. I think the other one that is a bit of an unknown, obviously 18 months we've all come through. We think we're getting aware of it. There's track and trace and all that impact on the business at the moment. Fortunately, we haven't been hit particularly hard by that. But if there's another pandemic, another lockdown, unplanned event, that's a risk to the business. So I think it's largely areas outside our control. I think once we secure the contracts, etc., I'm very comfortable in terms of execution.
Thank you. And in generating 50 to 20 million cash by full year 26, can you clarify the likely profile of free cash flow over the 5-year period?
So in terms of the profile, I would say it's in terms of the annual elements. I think it's more back-ended but I think we're relatively covered in all of the years in terms of the commitments that we'll make, because obviously we're going to see revenue grow, so that will generate more cash flow.
Thank you very much. And to what extent is the combined offering a critical determinant in winning business, or do clients prefer to use a niche supplier for each of their requirements?
Good question, actually. I think there's no one simple answer to that. I think it's a case-by-case basis. But we are seeing risk management coming in more and more, simplification of the procurement cycle, and combining of the elements we're beginning to see more and more of. Obviously we're pushing that more and more as well, and where we see simplification of the procurement cycle for our customers, we will combine and offer, and therein we're saving the customer cost, and in my language that should lead to better returns. So it's a kind of case-by-case solution, but we think we're seeing more going towards combined packages and simplification. Partly driven, I think, by the volume that's going to come into the market, and I think procurement strategies, relationships, frame agreements, etc., are going to be important. Some of which we have in play. And I think partly early engagement to meet the technology challenges. Pleased to see that we're doing some joint collaboration R&D initiatives as with some of our customers, which I think is good for the industry. So, that's the kind of general trend we're seeing.
Thank you. And given margin pressure, is there any consideration given to merger or acquisition of competitors to gain more pricing power?
Well, I think on the margin pressure, I'd maybe comment on that is, we're not seeing significant margin pressure. Obviously, there's always this negotiation, but, we think the margins are holding up quite nicely. I think there's a significant barrier to entry for the technologies we've got here. And I think there's a kind of know-how and understanding, and I think there's an ongoing learning around that, as I've kind of alluded to. In terms of M&A, we're open-minded to M&A. I would say we're also open-minded to accelerating our plan that we've mapped out today, as the market dictates. And we're open-minded to growing the business. Now, I can't really make any comment on mergers and acquisitions with competitors, etc. We'll just look at investing in the business, focused on cash generation, profitability, and shareholder return. And M&A will be a big part of that in the outer years. And obviously, we've got to do our homework as to what that looks like.
Thank you. And do you have any thoughts regarding expanding Tekmar's presence in America?
Yeah, it's clearly we're delighted now to see some traction in America in terms of commitments. The 30-odd gigawatts that we've seen as installed capacity, and we've signed up a partnership with a local supplier in the US as part of that investment. And we'll grow that in time as we see the market evolving in the US. And so we've taken the first steps towards that strategy, and we'll continue to invest as we see the market growing, and assuming that we get our fair share of that market.
Thank you. And can you pass any comment on support taken from the government related to COVID grants or loans, and how this affects the company going forward?
We continue to explore those opportunities. I think where we are with our own banking facilities is we're looking at UKEF backing, because a large part of our opportunities and growth is within export. So that's really, we're trying to stay a little bit independent where we can, so we have more sustainable, longer term facilities. But as I mentioned on one of the earlier slides, what we are exploring is the many funded programs and grants that are available for this particular technology space, both regionally, nationally, and internationally as well. And we set up a team to look at on the radar what's available, then that what matches where our expenditure is going to be and where our technology will be developed.
Thank you. Are most of Tekmar's products made from plastic, relying on petrochemical processes? And if so, does the rising oil price decrease the profitability of this segment by increasing the cost of manufacture?
Yeah, I wouldn't say it's the threat is the oil price. I just think it's the economy recovering out of this COVID crisis we've all been in, and we're all hearing noise of price escalations, etc. That's more what's on our focus of attention in the short term. We've de-risked that by buying some stock on some of our key components and the key raw materials. So there are two main issues in play: logistics and price escalation. That's more the issue. We see, oil price may be a factor of that, but it's more the kind of COVID impact recovery, global demand, and we're seeing that in a number of areas in raw materials generally as an industry. That's mainly the focus. It's not so much directly related to oil and gas, but of course there will be a contributing factor with oil and gas recovery, which on the one hand we're happy with, because obviously we can sell some products into the oil and gas market. So we're delighted to see the kind of recovery in Brent crude price.
Thank you very much. And given the poor share price performance despite sector tailwinds, can you give us an idea of the company's current plan regarding dividends or buybacks going forwards, as well as achieving a re-rating?
Yeah, so that's something we'll have a look at in the outer years of the strategic plan. So there are no planned dividend payments right now, but it's something we'll stay open-minded as we see this recovery and the business recovery going forward. So Derek, I don't know, you want to make any further comment on that one?
Yeah, I think it's an interesting question, and I think at the moment our plan is obviously self-fund the business in its growth, and as we get visibility and the flow through coming through, as Ali said, we'll explore what is the best structure and what the dividend policy should be. But at the moment there are no plans for dividends.
Thank you. And that's the end of questions. Ali, do you have any closing remarks?
No, I just really delighted that you've taken the time to kind of listen to the story that we're looking to deliver over the next 5 years. Hopefully it's given you a bit more clarity and visibility regarding our plan going forward. I would just reiterate, we're very pleased with the marketplace, our positioning in the market, and, we're very excited about the growth potential ahead of us and the investment plans we've mapped out to capitalise on that growth. So, we're kind of looking forward to it, and we'll look forward to keeping you updated as we implement the plan.